All right, traders, let's get going with today's recap. This is Christian from Tribeca Trade Group, and it is Tuesday, April 27th. Theme of the day, big day of earnings reports. We're going to get that all week long. Not a lot of movement out of the S&P today, essentially flat. You can see the percentage change from the close up here, 9 basis points. So a very tight range for the day. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. The video is for information purposes only. Also, if the screen is blurry, it's just because YouTube has not finished rendering it. You're looking at like the regular non-def video, so it takes a little while for the high def video to come out. Just sit tight. If it bothers you and it's blurry, just wait about an hour and it should be rendered. All right, so that's the performance. S&P flat for the day. A little bit of weakness in the Qs today. They did move down the most. Perhaps one of the other things that I have highlighted here is the move in bonds. Let's talk about the move in bonds first. We haven't really talked about that too much the last couple days. That was a big focal point going back to going back a month ago, and it's too early to really say. This is just one down day. ZB long bonds were down 60 basis points. TLT, they're both similar pictures here. TLT was down a little bit more, almost 90 basis points. If we drill into the 1 hour chart, which is where I get a lot of my signals, short term, obviously shorter term signals from, but we did break value. We'll see where this goes. For now, we're basically back to the range of where we were last week, but we'll see if this starts to pick up some momentum to the downside. Right? We've been going sideways for an awful long time, for basically about a month. So, we'll see if we start to kind of, trickle back inside and start to kind of move down in through some of these levels that we've been kind of grinding higher through. So, I think that's kind of one of the most important developments from the day. Really, other than that, there's not that much to kind of talk about for the day, because this is kind of what these weeks are like when you have the Fed meeting, and when you have a lot of, coupled with a ton of earnings report. We know that's over 30% of the S&P reports this week. So it's one of those things where I just really try not to trade too much. I try not to really. I feel like the less I do, the better. Here's the trade blotter for the day. We'll talk about a couple things, but you could see, I thought some things were kind of interesting. There was big call positioning in Mosaic. We'll talk about that in just a minute. Obviously, a lot of earnings reports out after the close. This stuff is really difficult, in my opinion. I've learned over time, as a trader who's tried all different types of strategies, it's very difficult for earnings. If you really like a company, and your long-term account, which I don't really change around what I'm doing too much. I pretend that it's all part of the plan. But in my short-term account, I really try not to have any exposure to earnings. It's just too unpredictable for me. Some people are really good at it. But I'll give you an example, right? Google's had a great report. They're up to 2,400, right? So they're up over $100, which is, and their numbers were outstanding. But Microsoft, their numbers weren't bad. I guess the expectations were a little bit too high. Both of these names ran into their report, but Google's report, Alphabet's report was stellar. I guess they didn't like Microsoft's report. It's just kind of the way the reaction is sometimes, and what the expectations are. And I can tell you, because I know that everybody seems to really like option. I don't want to say everybody, but there's a lot of traders that love option activity. I could tell you, and I get, we see this on Twitter all the time, right? A name goes up. There was some call. So I'll give you an example. Let's talk about the good first. But I like to do this stuff. It's kind of fun, right? Goog, there was some July calls that went up. Decent sized trade, $750,000. Now it was versus open interest, right? There's 288. So I have to really look at open interest for that. There was also a small order in Google too, right? This is Cheddar Flow, by the way. If you're not familiar with it, it's a really good system for aggressive option activity, call it. But this was an opening trade, right? This was the not this week's, but next week's 2430 strike. So it looks like they got that one right. Now let's go over to Microsoft. So there must have been no option activity in Microsoft. Consider maybe there was puts, right? If option activity is right all the time. Nope. Look at all the look at the difference, by the way, in the option activity in Google versus Microsoft. Right. So now you could say that, okay, well, maybe the same day stuff isn't really that important. Well, somebody got it right with Google, but why, look at all these orders that happened, right? Many of them were above open interest, right? Look at the volume, for the weekly calls. There's a lot of stuff. Look at look at the 2020. There's, sorry, look at the August options. There's 10,000 of those that traded today. So they got it wrong, but option activity, like an aggressive order, is supposed to be right. So listen, I'm not making, I don't mean to be make jokes and that kind of thing, but you just have to know some of the option. I illustrate this because some of the option activity is right, some of it is wrong. What happens is when there's a positive reaction, people will go through the scans and say, aha, there was a call, there was something that was bought. When there's all the option activity that was bought and the stock goes down, all the call option activity that was bought and the stock goes down, nothing, crickets. Nobody talks about it. It's like it never happened. So I always tell this to traders who are very interested in option activity. Just because it was aggressive, just because it was swept, it doesn't mean it's going to work. I hate to break it to you, but we see it all the time on earnings, the day of earnings, leading the previous to earnings. We see positioning. Sometimes it works, sometimes it doesn't. Right? I always say how I use option activity. You can see AMD is making a nice move here after hours, up $3. We did see some calls in that one too. That one, I guess they got right. But listen, the way that I use option activity is it gives me ideas. Right. So if I see something that wasn't on my radar and some aggressive calls go up and they're repetitive, I do take note of that. Right? I do take note that there's positioning going on. And it could also create short-term momentum. Right. We've seen all kinds of gamma squeezes and everything else this year. So that's important, for momentum. Right. If they keep on piling into calls and the stock starts to move, it has more of a potential to squeeze higher because you do have all that all that open interest on the call side, and the market makers do have to hedge. Right. The market makers, that's another misconception. Besides all the option flow that everybody watches, but the market makers are not really out there to like bet against somebody. The market makers are just trying to stay hedged, right? They're trying to basically make the spread in between the bid and the ask. They're not really out there, the majority of them, unless they're high frequency shops and so forth. But that's even a little bit more different. But the market makers are there to kind of pick up the nickels and the dimes every single day, and they'll do that if they stay hedged. But so anyway, I don't want to get too far off track, but it's important to go over. But I really think it's difficult. A couple things like I'll probably try for tomorrow. Is it tomorrow? I think ServiceNow reports. I do think that there is some edge. And, how many times a name will beat on earnings. So no jinx on this one. But, for example, if you look at ServiceNow, it's one of the names that I play almost every earnings quarter. They report tomorrow after the close. If you look at the history, right, so I'm looking in this column all the way on the right, they have a tendency to report good numbers. Not only report good numbers, but have a good earnings reaction, right? I saw this on Twitter, too. Pins was down. But I see it's so comical to me when somebody gets something wrong. When the price goes the wrong way as what you were looking for. I see people go through the report and they're like, yeah, you know what? But I like their numbers. The numbers. I'm pleased. I'm happy with the numbers. The only thing, in my opinion, I'm happy with is when the stock goes up when I'm long. I could care less about the numbers. I shouldn't say that. it's nice when, Google is a good example. Awesome numbers and the stock was up. But if at the end of the day, if you like the company and it goes down, it is interesting what they reported and so forth. But at the end of the day, it's the price, right? The price is what pays you, right? And I never try to argue with the price. Do I look for support? Like Microsoft, for example, I was looking to see if this thing can maybe get down to 248. It looks like we're holding this in Microsoft, this S1 down here at 252. I actually had an order at 259. If we go to the 1 hour, these Virgin point of controls are great for earnings. We just unfortunately did not get down to the. Looks like we took out this one. Yeah, I don't know. Maybe I was being greedy. But if I wanted to buy it, I could buy it here. 252 to me is just not down that much. I guess it's down to the 20-day moving average. So you got to really like the name, because if it doesn't, work out, you got to figure out how you're going to position in it. All right. So that's a couple things. So tomorrow we have Fed Day. A couple things that I thought were interesting for the day. Oh, and so we have one semi-name up and one down. I think Teradyne just reported. Right. So Texas Instruments is down. AMD is up right now. Teradyne is up right now, 134. So tomorrow is going to be another interesting day. We have Powell, and now remember, here's my interpretation for Powell. Is he going to come out with anything new tomorrow? I hope he doesn't. Right? I hope he basically says, "Hey, I see the economy recovering, inflation is ticking up, but we're gonna continue to get where we want to get to with the economy recovering." That's what he's been saying. Let's see if he continues to say that, or if he flinches a little bit and says something in regards to tapering. That's what everybody will be watching for tomorrow. When they're going to start, or not start, but yeah, I guess when they're going to start, to pull back some of their bond purchases and asset purchases. This is what the Fed balance sheet looks like, of course. So if we go to Fed balance sheet, this number comes out at the end of every week, right? We know that this has been crazy, right? This is the size of the Fed's balance sheet. So I think everybody is looking for that signal for when they're going to be doing that. Now, the other thing to remember is sometimes it's not what Powell says; it's what remember, institutions control this market, right? For the most part. And if they start to sell some things, that makes the market, regardless of what Powell says, right? If Powell says everything that he says, what he's been saying over the last couple of weeks, if there's no change, right? But if institutions start to sell, it doesn't matter, right? So you kind of have to realize that the market is going to be probably pretty whippy tomorrow, because there could be a couple sell programs that wash through. And if they're big institutions, that affects the market, right? So just remember that, right? I always get the question in the Tribeca Trade Group room, when I never really get the question too much when the market goes up, but when the market goes down a little bit, I get, hey, did something hit the tape? Was there news? And guys, sometimes it's just a selling program. It's just institutions that are lightening up, right? They don't have to stay fully invested, right? And the market just doesn't go down on bad news, right? There's a whole bunch of reasons, right? But that is a great reason for it, is that institutions lighten up. And sometimes they lighten up into a Fed day because they just don't want that risk, right? And then sometimes what they do is they're forced to, if they de-risk a little bit, then sometimes they're forced to buy back at higher prices. But they would rather, I'm speaking for these institutions because I see it all the time. They would rather do that, and I guess they're more comfortable when they get the Fed meeting out of the way, right? So I think that's going to be important tomorrow. And now, if you're not comfortable with that risk, so number one, everybody has different time frame, right? If you are comfortable with that risk because your time frame is a little bit longer, fine, right? If you're uncomfortable with that risk, what do? It's very simple. There's a couple things you could do. take some things off the table, because we talked about this in the TTG macro video this weekend, right? If you take some money off the table, then you could play a little bit more offense than defense, right? I get this all the time when there's just a tiny bit of a sell program that washes through, the market. Sometimes I hear people go, "Oh, my whole day is gone." It happens every time I get somebody who says this. You should be lightening up then, if so that because again, it's impossible to predict short-term moves in the market, right? But you do know that when there's events coming up, when there's a full agenda of things, there's a slightly higher probability that things might get a little bit rockier, right? There might be a few more bumps in the road. So I always say this so that there's no surprises, right? And I like to play it, when the market comes in a little bit. I like to play offense. I don't like to be on the back of your feet saying, "Oh geez, what happened? What do I need to do?" It's the worst place to be in. So again, a couple things, right? You could reduce your risk for tomorrow and kind of be a little bit more relaxed. So you don't have to be on the edge of your seat with whatever Powell says. Number two, you could buy, if you want to buy a little bit of puts, you could do that. I could tell you right now, I still have a short S&P call spread that expires on Friday, right? That's still a little bit out of the money, but I have to be mindful of that too, because the market could rally tomorrow too. So, let's go over a couple levels in the S&P. There's really not too much to kind of look at. We know that we've been on a really nice run over the last month, right? And, I think at this point you kind of have to be ready for anything, right? Because we are a bit extended, right? We definitely ran into getting extended a couple weeks ago, right? Last week we kind of burned off those levels, and we're sitting up here at a pretty high level, So I really think anything could happen tomorrow, and I think anything could happen at the end of the week, right? We know, and we've been so far, knock on wood, but I'm going to say it, we've been pretty lucky so far, because usually these end of the months have been like this. So if you're not fully aware that that's happened, I would rather have more, personally, I would rather have more of a cash balance and miss out on the market grinding up a little further than what we've seen at these past end of the months, right? So you really have to ask yourself, what you're comfortable with. Where do you see the risk versus reward? Is this a great opportunity to have a ton of risk on with the Fed, all the earnings reports, and month end? Or do you view that it's a little bit riskier? That's what you have to ask yourself Wednesday, Thursday, Friday of this week, and then position accordingly, right? Make those adjustments, okay? So be proactive instead of retroactive. Again, the video is for information purposes only, but I'm just giving you a sense of how to think about the next couple days before they happen, so this way you're not surprised, right? Do you like to be surprised when when we see this? So again, I'm not predicting that. All I'm trying to do is position appropriately based on a risk to return framework. Okay. All right. So there was this big call activity in Mosaic today. I already had this idea coming into today. Sometimes I view this as well. I was saying some negative things about option activity earlier. It's kind of the same thing. A lot of times, if you do your homework, you'll find these trades before you see the option activity. I think if you're just sticking to what you see on the tape, sometimes you could really miss some things. Now, I did not get into this trade earlier. If you look to see what I did today, trading blotter, I got out of my K-Web that I was in last week, the Chinese internet, which acted pretty well today. I think the Chinese internet group was up close to 1% for the day, so outperforming a little bit. But I actually like the CTVA better. Right, not that the chart looks that great, but sorry, I got the wrong. right? So it's just begun to break out. Now, again, both of these names are going to report earnings. You got one on the 5th, one on the 3rd, but this has been a nice breakout of this. These are agriculture names, right? And then the other name that I said pre-market was Mosaic, and it is what it is. I like to chart Mosaic, so because I'm very sometimes skeptical about following option activity, but if it coincides with my idea, then what am I going to do? Not follow an idea because there's option activity on the tape? But if we swing over to our chart section, this is what we put out at just before the pre-market session, right? So here was my watch list coming into today. Clearly a couple of names I looked at today, but my goal was really not to put on. I think that's VPOC was actually taken out here. Let me just get the right chart. I think go with the 20-year and let that adjust for a second. I mean, it's close. This candle on the 20 time frame, it says that this VPOC was taken out. So if that's the case, we do have some open road to get good volume on this. So I do like this space, and I talked about yesterday, and always really kind of very open, to what this tape is going to do. But I started to see oil moved up a bit today. It's still, for me, oil has to get above 64 out of value. But we did also see some positioning in the energy stuff, and I think this XOP trade, I put on a little bit of stock and calls. I got out of the calls today, but it's fighting with the bottom of value here. Not fighting, but it's basically trying to get into value. But that's XOP, and we also saw some XLE as well positioning. So that's basically what I did today. I took off a couple trades that I had on. I got out of I just missed this SE target that I was looking for today, and the damn thing faded on it. 278, which I talked about in yesterday's video. So sometimes maybe put your alert a little bit lower because I missed this thing. And I just figured, you know what, I want to be lighter into tomorrow anyway, especially with the high beta stuff. And that's it. And I got out of a Pepsi kind of placeholder position. Zillow, which I was in yesterday. Zillow, I think, I was just kind of looking for a second day move. And it was ended up being down 1.5%. This Zillow is going to have some resistance to fight through. Now, I'm long this name in my long term in the TTG Trend Portfolio, but I don't need to be long it in my trading account too. All right, guys, that is it for today. The video is about 23 minutes, so I think that's good. But yeah, I mean, I think I talked enough about tomorrow. But yeah, for me, again, I'll just kind of summarize. I don't, just like with a lot of these earnings reports and trying to predict what's going to happen, I don't see a lot of edge trying to predict what the next couple days are going to be. When I don't have good edge, then I don't force things, right? I try to stay out of the way of being heavily exposed to the market. All right. Again, if the market happens to grind higher and keep going up and rally for some reason the next couple of days, so be it. I've got some trades on, right? But because I never get 100%, unless the market is really doing something bad, I never get 100% out of the market. But do I try to, reduce my risk? Absolutely. All right, guys. Thanks for watching. Have a great night. See you tomorrow.